So dividend stocks and passive income have been all the rage on YouTube over the past few years, and it's really great to see that people are taking a bigger interest into their financial future. I was recently asked what is my favorite dividend stock in my current portfolio, and I thought what better way to answer this question than doing a video on my 3 favorite dividend stocks that you can literally hold for life. Yes, for life. Continue investing in these and it will generate a decent sized passive income into your financial future. Now, a lot of videos on YouTube will talk about Coca-Cola and Walmart. I'm going to sort of go a little bit off grid here, and these 3 stocks are actually quite well diversified in my opinion. So if you continued investing into these, I think you'd do quite well long term. Now that said, just remember this is not financial advice. This is my own personal opinion, and you should do your own due diligence before making any investment decision. Now again, to the really new investors out there, these stocks, in my personal opinion, you can continuously reinvest your dividends into and set yourself up for a decent payday when you come to retirement. You could also just continuously buy into them at any price, in my opinion, and over time you should get a decent average and it should pay you a decent income in terms of dividends and, more importantly than that, passive income. Now, if you like the idea of generating passive income, do me the kindest favor of making sure that like button is turned blue. It would massively help me out with the YouTube algorithm, and more importantly than that, let's be honest, blue is a better color than gray. So go ahead and make sure that like button is turned blue. Now, first up, we have AT&T, a telecoms company. If you're from the UK and you don't know what it is, but it's one of the largest telecom companies in the world. The ticker symbol for this stock is literally the letter T, and it's been one of the highest dividend stock payers on the S&P 500 for a long time. Now, this telecom and media giant has been steadily increasing its dividend over time, and when it comes to looking at dividend stocks in general, that's one of the biggest things you should look for. A company that you can buy and they're genuinely increasing that dividend as their revenue grows. Currently, AT&T pays around about a 6.5 dividend at the current price, which is definitely not a bad return when you think about the current market climate. Now, Simply Wall Street's algorithm actually thinks AT&T is massively undervalued, and its assets and liabilities are quite strong along with its debt to equity ratio. So in terms of financial stability in this company, it could just be a good value buy where it is. Now, pre-Rona, it's currently around about 17% away from them levels. So again, if we just get back to that level, it could just be a decent investment in itself. And with 5G rolling out soon, I think AT&T will have a very bright short-term future. The downside of this company is the 5-year chart. It's slightly mixed. On the 5-year chart, their current lows offer a 20% downside if we go on them lows alone, and their current upside over a 5-year period is 30%. So if you go on a 5-year chart, it's sort of in the middle of the range. Now, for me, with this company, it's very good long term, and if you continuously buy into the big red days like we've been seeing, I think this company should be a solid investment. Again, over the long term, and that's my opinion, not financial advice. Now, before we move on to my second favorite dividend stock for passive income, first, a little word from our sponsor. Let's be honest, I'm just a fat bloke with a beard. I have no sponsor. So if you want to support the channel, go check out Patreon down in the description. But moving on swiftly to the second favorite stock. My second favorite stock for passive income in the US is none other than ExxonMobil. This oil mega giant literally rewards dividends to its investors year over year. For me, oil majors in general are one of the best passive income stocks out there, and if you continuously invest into the big red days, literally they come every few years, you can build up a solid amount of shares over a long period of time and reap them rewards in terms of dividends and passive income. Currently, this oil mega giant offers around about a 5.75% dividend per year, and again has a great history of increasing its dividend before the whole shutdown and lockdown situation when all oil majors really took a massive hit. But Exxon didn't fully cut their dividend like some of the banks. They continued paying out some investors at least something. The debt to equity ratio is brilliant, and their assets and liabilities are even better in my opinion, and Simply Wall Street thinks it's around about fair value at its current price. Now, pre-Rona, it's currently around about 15% away from that level, but if we go on the Rona lows, it's a massive drop, 45% away from there. So we've seen a massive rally in oil majors in general, and that's a big drop if the countries and world went into another lockdown situation. I personally don't think that's going to happen again, but if it did, just bearing in mind that's the level really you should be looking at. Now, if we look on the 5-year chart, we can see as well the 5-year highs are a decent gain as well. So if we even just got to them levels, and that's not saying it ever will, But again, on the 5-year chart, there's definitely some upside on the chart alone with ExxonMobil. Now, if you're looking for dividend income and passive income, literally you need an oil major in that portfolio. These companies have many ups and downs, and a lot of them trade in channels. So if you buy the lows and sell the highs, you can literally repeat this process and hopefully get a dividend while you're waiting for that high to happen. Now, ExxonMobil is actually one of my favorite tickers for this because it does tend to trade in cycles, and if you literally buy the lows and sell the highs while you wait, you get a dividend. It's a win-win situation. But that said, I do think if you continuously buy into the big dips in oil, and I don't mean oil is in ExxonMobil, I mean oil is in the price, I think you'll get a really good share size at a really good average, and again, that dividend will look good long term, generating you some passive income. Now, moving on to the last dividend stock for passive income, and I just want to say I could have easily picked Walmart, McDonald's, Coca-Cola, but I didn't. I genuinely went with some stocks that not many people are talking about in terms of passive income, and there's many videos on YouTube talking about the previous mentioned 3. I wanted to do something slightly different and give people a bit more variety and options, so if you do appreciate that, again, just double check that like button is turned blue. Now, if you haven't got a broker yet for dividend investing or passive income, or are looking for a new broker, you can check out eToro down on the pinned comment. If you sign up via that link, you get access to the LWT eToro chat room. Now, swiftly moving on, let's have a little look at the third stock that I think you can buy and hold to generate passive income for life. Now, that ticker is Procter & Gamble, and if you don't know what Procter & Gamble is, just Google them, look at some of their products. 100% you will have bought something from them at some point. They're a packaged goods company, and they literally have a very diverse range of products. Procter & Gamble currently have around about a 300 billion market cap, so definitely not a small company, but I think this is a company new investors may have never even heard of, especially if you're from the UK. Now, simply, Wall Street actually thinks it's undervalued by around about 20%, which is always a good sign to see, but again, I don't go on this alone. Their debt to equity is quite good as well, and their assets and liabilities are very covered there, so as with the other two, this company looks like it's in good financial health. Now, the dividend is a little bit lower than the other two at 2.5%. That dividend could increase later, and again, if you get in now and slowly build up share size, you could probably reap a little bit more rewards than the average bear. Now, on the 5-year chart, we can see a slight uptrend. So again, if you are looking at buying this company, make sure you buy in on those big red days and then big market dips, because if you buy the highs, you could sit through a bit of pain, and especially if you're a new investor, that's never a good feeling. Now, when it comes to dividend investing for passive income, there's a few things I want to cover here. First thing is, it's near enough impossible to pick just 3 stocks to generate enough passive income for the rest of your life. Now, I've spoken to many investors in the chat room and over Twitter, and a lot of people just go for something that's got the highest dividend, pays monthly, and that's never really a good long-term strategy. You want to look at some company that has a huge market cap, in great financial health, and has a good 10-year history of paying dividends. Buying a new startup property company that pays you 10% a year or 1% every single month is never going to be good long-term, but it's a good way of getting investors in before they do an offering, or they could just be financially screwed themselves. So just take that into your pockets with a little bit of a warning when it comes to building a diversified investing portfolio. Now, we also want to address that things do change in the future. Although I've said these companies are for life, of course, if Exxon faces bankruptcy, it's something that you should definitely not be holding for life. And I'm not saying that's going to happen, but never say never in this market. I mean, realistically, let's be honest, we all thought GameStop was going to go bankrupt, and look what happened there. Another top tip really when it comes to dividend investing is try and buy as many red days as you can, continuously size into these, and don't just buy in regularly on big days up. Don't get FOMO. Another easier strategy here is build a simple portfolio and set, say, 5% into 20 companies, and then every single payday just continuously buy the same companies at the same prices, and over time it will average out, provided that they are good companies. Now, if you are watching this far in the video, help me out in the comments by just dropping the code word PIXIE. It would massively, again, help me out with the YouTube algorithm, and I genuinely hope I've helped some new investors find some stocks that they can genuinely grow their wealth by. Investing in general is a very tough game, especially when you look to the long side. It's very easy to get blinded by the lights of AMC or Tesla, and reality is, as time goes on, you're always looking for the next higher risk play, and eventually you will get one wrong. So let me know your thoughts of these 3 down in the comments. That's it from me. Best luck out there, and I'll see you in the next one. Take care. Peace.